Okay. Something should be working. Hopefully you can let me know in the chat. Thought I'd do a quick live one. The recordings weren't working for me, so I thought, why not? We'll do it live. Okay, seeing some stuff in the comments. We think we're good. Hi, hello. What's up? Not much, not much. Right, let's talk about the markets. Before we start, the show has a sponsor. You know them, they're Woo. There's an article in the description, a long form one, pros, cons, business model, risks. Within that article, there are sub-articles about counterparty risk, leverage trading. Just go click stuff and make sure you know what you're doing. If you feel like taking on some counterparty risk and you want to try Woo, you can use our link if you want to support the show, or use any link, or don't. Do whatever you want. It's your life. Just make educated decisions and we'll all be happy, right? Enjoying the weather, Cred? No, I hate the sun. I hate summer. I hate how people are happy and are frolicking about in their summer clothing, smiling, drinking outside. I love winter. I need everyone to be cold and miserable like me. That is when I thrive. Summer is just not it. But yeah, let's talk about markets, because I know some people are going to be watching this via the replay function, and I don't want to waste too much of their time. So we'll go do the market bit first, and then we can maybe chat if anyone wants to afterwards, and I'll answer some questions. So first things first, I won't waste your time with the monthly time frame because it's not at any type of structure and nowhere close. You know, monthly resistance is some way away, monthly support is some way away, although getting increasingly closer to it. But for the time being, there's no real signal there, so I'm not gonna pay much heed to it. The weekly is still downtrending. That may seem like a controversial assertion to make, given this price action has been broadly characterized as chop, but I don't think it is chop, because it's making lower highs and lower lows on this time frame. And so lower highs and lower lows is what you see in a trend, or at least when there's like a dominant market structure. Whereas chop, which kind of means price go, you know, there's some idea of a mean, right? And then price goes above it and it ultimately isn't accepted, goes below it, ultimately isn't accepted, and more or less ends up where it started, right? With deviations above and below. This isn't doing that. This is quite clearly, I think, making lower highs and lower lows on the weekly time frame. And so if we look at it on a candle closing basis, ever since our high, low, lower high, lower low, lower high, lower low. That's a downtrending structure on the weekly time frame. You could also just kind of just draw a line through it. Not like a tradable trend line type of thing, but just something to point towards a dominant trend, and it is down, right? We could also look on the line chart and arrive at a similar conclusion with high, low, lower high, lower low, lower high, and a sort of lower low in the making at the moment. So that's a weekly downtrend, I think, at least. That's what the available evidence suggests to me. So I think if you want to buy this thing, the way that trend reversal makes sense for me is when fading dominant trend or market structure. One is reach high time frame support, where odds of reversal are greater than odds of continuation in your estimation, or two, break in market structure. I think that's fairly self-evident, right? So if you're going to be fading a dominant trend, which means stepping in front of it, that is to say buying a downtrend or selling an uptrend, I think one of these two things need to be in play in order to consider it. The first is reaching high time frame support, where the odds of reversal are greater than the odds of continuation. I think the earliest reasonable version of that on the weekly time frame is 24k. I've got my own reservations about 24k as support, but you know, the weekly's the weekly. That's the earliest area where that could make sense. The other one is, you know, down at 21k, then we get into monthly levels, but whatever, we're not there yet, I think is the key point. And the second one is a break in market structure. So if the market is making lower highs and lower lows, what would break market structure would be a higher high. So instead of lower highs and lower lows, a higher high would be a shift in market structure. The earliest available kind of price for doing so is 28k. Maybe we get another one, like for example, if we get another lower high and then a lower low, you'd just basically shift that as your new market structure break level. But at the moment, it's 28k. So if the market then chooses to, instead of following the dominant downtrend pattern, instead it rallies and closes above 28k, then we can make an argument that market structure on the weekly has shifted, and so now we're expecting higher prices and for this to act as support. So either it breaks market structure, consolidates, go higher, or it breaks market structure, and if it pulls back, you expect this to be a higher low and it goes higher. But the fact that it breaks market structure would be an sort of indication that you should shift bias, but that isn't available yet either. So out of our two conditions, when hopefully we've established that this is a downtrend of sorts, we have two conditions under which we could step in front of it. One is reaching high time frame support, which becomes available between 22 and 24. We're not there yet. The other one is a break in market structure, which at the moment would require trading above 28, and we're not there yet. Hi, can you please differentiate between deviation and break of structure, referring entry triggers? Maybe in another video. You might need to ask the question with a bit more meat on it. I'm not entirely sure what you mean. But yeah, hopefully that makes sense in terms of what the weekly chart looks like at the moment. There's really not much else to add, I think. Yeah, that's the weekly. And even just in terms of like, look at the up weeks we've had, right? Like ever since the top, down week, up week, immediate 2 down weeks, up week, immediate 2 down weeks, like however you slice it, the weekly chart doesn't look great at the moment. The final point I'll make about the weekly is that a bit of trading so-called wisdom that I've internalized is I don't like to fade slow markets or markets that drift. Stepping in front of them tends to be a pretty bad idea. That both applies to shorting boring uptrends, but it also applies to buying boring downtrends. Now, this is quite a boring downtrend, which is why you've seen it characterized as chop, but those who've tried to step in front of it have had a really rough time. This may seem counterintuitive, but what you want to see if you're going to fade a trend is actually a pretty aggressive move, right? So something that instead of moving more diagonally, moves more in the vertical plane, right? And same for uptrends. You know, if you don't want to be selling this, but if it does this, then you might want to consider selling it. And the reason for that is if we're generally looking for reversion type of trades or reversal trades or whatever you want to call them, you want to see kind of an apex and a peak and a climax of sorts when it comes to aggressive participation. And you want to see like a ton of FOMO, a ton of aggression, fresh open interest, market orders, the whole thing, and someone the market really getting, reaching that peak tape speed, if you will. You want to see aggression that goes unrewarded. That's probably the simplest way of putting it. And when the market is just drifting and moving kind of on its own, you don't see those types of opportunities. We've got the weekly downtrend, we're not at a level of support, and the market is drifting. I don't have a setup to stand in front of it at the moment. Now, the way this weekly can resolve in a way that would sort of facilitate the anti-drift argument, if you will, is essentially where if the steepness of the trend increases and it becomes more kind of vertical or aggressive, you'd want to basically see from this kind of orderly drifty structure to a more aggressive puke type structure, and we know that puke would take place contextually into a level of support, and that becomes attractive because at this point you have the argument that we're no longer drifting. That's good, and we're at high time frame support, so people are going to get really aggressive, and they could be trading at bad prices for them at good prices for us. Okay, those two things would be great. So if the market chooses to shift that way, so it stops drifting, it pukes, and it pukes into a contextually relevant level, that's good for us. The other way it could be good is, again, that was the first criterion of hitting high time frame support. The second one is if it fulfills the market structure based type of thing, where it's drift, boom, breaks market structure. That would also be good, right? So be that for a higher low or just for break, consolidation higher. Either of those would be great. But as long as this thing just keeps drifting in a downtrend, I don't want to buy it until it reaches support or meets one of those aforementioned criteria. Does that make sense? Okay, so that's the weekly view at least. As far as the daily goes, it's been quite choppy. The only thing I'm really monitoring on the daily time frame is I am somewhat suspicious in a non-conspiratorial way of this double bottom looking thing here that at least on Binance didn't spike. If the market, I'd like to see who's hanging out below here. even for a kind of an intraday trade. If we get a proc and prod and a reversal, that would be cool. But even if I'm looking for bounces higher, I generally, as a matter of superstition, try to avoid getting swing long with nice double bottoms below me or getting swing short with nice double tops above me. I just don't like it. That could be completely sort of, again, superstitious nonsense, but it's a rule that I follow and kind of makes sense to me. So as a result, really on the daily time frame, this is what I'm paying attention to, these lows here. If the market wants to poke and prod and see who's hanging out there, that would be interesting as a trade opportunity. The other one is, given we're in a dominant weekly downtrending structure, any rallies I have to presume are lower highs until proven otherwise. We know that proven otherwise is sort of 28k plus, which is quite far away, but really the first trouble area, if you will, we can probably derive from the daily and the 4 hour. So if we go back to the range that we covered on Monday markets before, this sort of 26.4-ish, yeah, hold on. Let's just do it properly with magnet mode. Yeah, 26.3, 26.4 as our range low. 20, what is this? 7.4, nice $1,000 range, very volatile. As our range high, we can probably splice it up to get a midpoint of sorts at 26.9. At the moment, any rallies into both the range low, but also just this entire pre-breakdown cluster, I will probably treat as rallies into resistance. Okay, and if we look on the daily time frame, our 4 hour range has some confluence because it lines up with this recent lowest close here. Okay, and just as a whole, this daily, if you ask us supply, demand, order block, whatever guy, they'd probably map out this pre-breakdown consolidation at, again, 26.4. So a lot of technical stuff aligns there as well. So really, the only stuff that's on my radar for this week for shorter term stuff is if there are any bounces to be had, it would have to be on a failed breakdown of these lows. It's like a deep spike and then something that shows signs of acceptance or absorption down here would be interesting at the very least, a failed breakdown. That's longable. Otherwise, if the market chooses to rally, especially if it leaves this double bottom in, I'll probably treat that as a rally into resistance with a decently high probability of forming a lower high somewhere below 28k, probably in like closer to 27, you know, mid 26k in this daily plus 4 hour resistance level. I'd probably look for that as a lower high towards that double bottom. Okay, so really that's it. As we covered, weekly still downtrending, daily choppy, 4 hour nuked out of the range once, but now this is kind of nuked out of it again. Could it be a double deviation? Yes. Is my inclination that this breakdown is real? More so than not. How do you put all that together into semi-actionable trade idea stuff? On the long side, which I'm somewhat reluctant to punt, but I'm open to it, I'd need to see a failed breakdown through this double bottom. That would be cool, because at the very least it would be risk defined. And then we could just go for another pump and dumpy type of pattern. That's fine. Otherwise, if it chooses to rally, I'm going to assume it's a lower high until proven otherwise, given the state of the weekly and the daily. Reasonable candidates for that lower high. The earliest is 26.3 as the range low, but it could go as high as the midpoint at 26.9. I still think 26.3, 26.5, this kind of pre-breakdown cluster is a decent spot. At least I'll look for it. And then my target there, if it chooses to make that lower high, would be the double bottom. And if it just starts mega mooning, then I'll just lose money and wait to see how it resolves within this consolidation. And if it, you know, whatever it wants to do at that point, we're just thinking 10 steps ahead, and I think that's not very useful. Does that make sense? Okay. Am I missing anything? I don't think so. I mean, I really don't love when the daily time frame looks a bit crap. It's just sort of reflective of conditions that aren't great, or at least I'm very skeptical of my edge. If the daily time frame sucks, kind of raises an eyebrow. We could, of course, if we wanted to, start LARPing on the 1 hour and say that this is our local support, this is our local resistance. We could add a midpoint to that, and we could start doing the whole, it's deviated, the range high once. If it gets back above, that's bullish. But if it pushes and rejects, that's bearish. If it breaks down and back above, that's bullish. If it breaks down and stays and breaks down, I personally don't trade like this. I'm not even being facetious. I just simply don't trade like this. I find it quite confusing. More often than not, I'll try to establish a dominant directional bias and trade that dominant directional bias. And if I'm wrong, I will lose money. That's it. There's no magic bullet where you have a perfect system that will flip at the perfect time no matter what and give you entries both ways and have a plan for every level and every direction. In my estimation, that more likely leads to analysis paralysis and chasing more so than it does good trading. But people do things differently, and that's fine, whatever works for you. Yeah, so that's really the extent of it for BTC USD, okay? Overall, it kind of feels like the market had a really good opportunity to move higher because, you know, this was the reversal when the Coinbase news came out, and it really looked like the market was willing to shake it off and that the bottom sellers who were late to trading the news would be trapped. We just kind of drifted back down. So, yeah. I still think what the 1 hour, 4 hour nonsense shenanigans aside, even the daily to some extent, bigger picture, as long as this is the case, it doesn't look great. Weekly dominant downtrend, and it's worth waiting for the downtrend to break or for it to reach support. And this is designed to take your money. That's probably a better high time frame overview. As far as ETH goes, it feels like it's been 50 years since this failed breakout on the weekly, but it's still valid. It's still valid. There's, you know, weekly close above 1.9, send it. Otherwise, this has just been agonizing chop below resistance, which has finally started to move. For the first time, we had a break of weekly structure, which is quite reflected quite well on the daily time frame as well. So we finally had a weekly lower low close, right? So even the argument, you know, the sort of semi-bullish argument here was, look, we had a failed breakout. Now the market has spent like a month and a half doing absolutely nothing. Surely, if the failed breakout was real, or if that setup is going to work well, then you'd expect some urgency from the trapped participants to push this thing lower. Instead, you have a really ugly looking chart, but the market is kind of holding up. And now that argument is no longer available, given we've sort of broken that level. Okay, so now it looks like the weekly looks weak because the two developments in price action on the weekly time frame were a failed breakout and now a lower low close. None of that is constructive. Okay, that, at least for my money, that's not a good look. I think that's made quite clear on the daily time frame, where if we look at the most recent range, the market's just puked through it, right? Regardless of which specific anchor you want to use for this consolidation, it's quite clear that the market was, I mean, unironically, moving sideways for some time, or at least it established a floor of sorts, and now we've puked through it. So, needless to say, the earliest bullish argument you're going to get is if the range breakdown fails. That is to say, a daily close back above the breakdown point of 1.7, 1.8. That's at least something risk-defined, right? Back above here, you could start to look for a rotation higher. The issue here is that market structure still looks fucked. So while it might be tempting to target some sort of highs here as a mechanical target, there's a decent chance that you end up getting stuffed somewhere in this area for a lower high before the market trades lower again. But purely in terms of just levels, I think the earliest reasonable area that longs make sense are above 1.7-ish, right? 1.7, 1770, 1780. On all time frame, this is just like a massive shelf that's broken. So until as long as it's below that, that's bearish and looks like a bearish retest. All of that is bad. If it wants to, you know, fail, break down, get back above, or just, you know, drift and get back above, that starts to look better. But again, we're engaging in counterfactuals here because what's in front of us is a breakdown and retest that looks bearish. Okay, so at least give me daily evidence so I can make the case for playing a bounce on this type of thing, that these bottom sellers are trapped and we can squeeze to their pain point a bit higher. But at the moment, that's just not available. Okay, so regardless of which time frame we look at for ETH, if we give weight to recent price action, which I suggest we should, the weekly has made a lower low close. The daily has broken its range. The 4 hour, same thing, has broken its floor. So that's not great. Now, of course, this begs the question, could this be a deviation? Yes, of course it could be. but it only becomes a deviation if it shows strength and gets back above the level where it broke down from. This isn't a deviation until it is, right? I mean, maybe it's one in the making, but we can't know that until it proves this to us by getting accepted above the breakout point. So that all that means is, until proven otherwise, in my system, I try to make the least number of sort of logical leaps or assumptions. And so for me, this is a breakdown until proven otherwise. Okay, and I think the evidence currently supports that. As far as speaking of supports, for ETH, it's a bit of a tricky situation. There are two levels that I like, and they're sort of contingent on how you choose to map your range. If you take a narrow view, that the range, if this is the high and this is the low, and the level is quite nice, you get a weekly midpoint at 1680-ish, which I think is reasonable. If you take a larger range and go from 1k to 2k, you get a midpoint at 1.5-ish, which is also quite reasonable as a level. So the earliest kind of first trouble area or weekly support, what have you, is at under 1700 at 1680s, at least for me. And you can see on the daily, it's a fairly self-evident area as well. Okay, that's the earliest, bearing in mind that if the larger range proves to be more accurate than the smaller one, you need to wait for lower until your midpoint. But yeah, so if we look at the state of the majors, we've got downtrending structure on the weekly on BTC, and we have failed breakout plus lower low close structure on ETH. And that's just not constructive. Now, could this be a mega Fugazi trap, bottom signal, sentiment, SEC does nothing, CPI, FOMC, GFY, HFSP comes out, and it's all bullish and fucking moon revert it? Absolutely. But I don't have those facts in front of me at the moment, right? That's not the state of the market. That's a hypothetical, counterfactual state that isn't what we have right now. So if those conditions come true, of course those arguments become available. But you don't want to trade conditions that aren't there, right? You have to trade what's in front of you. And that's, I think, the dominant theme at the moment with the available evidence is weekly weakness on BTC and ETH. Does that make sense? Okay. Final point I'll make regarding the big boys is that I've seen some conjecture on social media that we've decoupled from the S&P, and that's true in terms of short-term price action. But I think there's another way to look at it, which is risk assets in general, when defined as sort of risk indices, Nvidia, Tesla, whatever we associate with kind of boomer risk, they've been quite risk on. And we've enjoyed no part of that price action, which sucks. The problem now is we had this window where crypto could have joined in on the fun, right? Sort of 1, 2, 3, 3.5, especially this month, we've had a breakout, right? Breakout in the S&P, NASDAQ, quite obvious breakout as well. On the weekly, we can just look at these up weeks that broke market structure. 1, 2, 3, 4, fifth week now. The S&P as well, if we count the week of the break, 1, 2, 3, 3.5 now. That could have been crypto. And instead, where this weekly looks like this on the S&P, the weekly on the NASDAQ looks like this, and the crypto weekly looks like this. I mean, that's not evidence of strength, right? That's evidence of weakness, in my view at least. Now, the issue is, in the past, when we've had these types of on and off bipolar correlations with risk indices, they sort of come back at the worst possible times. So colloquially, it could be the case that we enjoy none of the upside when it concerns crypto and legacy, but enjoy all of the downside when it concerns crypto and legacy. That's completely plausible in my mind. And to me, at least, it's more likely that that is the case than it is that we've decoupled completely from legacy and it has no kind of effect on future crypto price action. So my argument is not that the correlation is dead, it's that it only kicks in to the downside. Which also makes sense because we know there's been a heavy crypto seller kind of trading on this regulatory barrage as well. We have our own flows that are sell heavy more so than buy heavy. Okay, and now the problem we have is that having enjoyed none of the upside in risk assets, they're now reaching relatively precarious monthly levels of resistance, at least if the chart is to be believed. And I think there is some some good evidence to suggest that the monthly chart should be taken seriously, because this is something we wrote about and spoke about at length on Technical Roundup. Here, and here, the 3600 monthly pivot, and now we're just simply entering another pivot at 42 to 4300. Okay. Now, yes, this is a big box. You could always dissect it and go range high, range low, range midpoint, go on the weekly and the daily and refine it. But I don't think it's necessary, given this isn't a market that I sort of trade actively, right? This is just something I monitor to derive maybe additional context or directional bias. But bigger picture, this is, all of the upside that we had between support and resistance. Crypto didn't really do a lot, certainly not on the breakout portion of it. But now we're reaching resistance in the S&P. So even if you were to have kind of decent crypto bullish signals, you're taking those bullish signals into macro risk asset resistance. And I just think that doesn't help. It's more of a headwind than a tailwind, at the very least. And similar logic, of course, applies to the NASDAQ, unsurprisingly, that it's also more or less trading at the likely lower high point of breakdown, whatever you want to call it, type of structure. Okay, and again, these are big monthly boxes, but given we're using them on the monthly time frame and for broad directional bias, it doesn't really matter that it's not surgical. You could always make it surgical if you wanted to, but that doesn't help. Okay, yeah, that's it really. I mean, altcoins got thrashed. They look pretty crap. There is an argument to be made for short-term mean reversion. But even that, I think, to a decent extent has played out. A lot of these had, nuked 20, 30% and then bounced quite significantly from the lows. Some of them obviously didn't. But across the board, the dominant theme in altcoins is that many of them had been consolidating for weeks and months, and that's the stronger ones. Others have just been trending down. But even the stronger ones who'd been somewhat consolidating for weeks and months are here now, just broken down from their range. And so while there may be a long trade available from the breakdown to some sort of retest level, a bigger picture, when you have multi-week, multi-month consolidations and breaks from value, you don't want to step in front of that without good reason, because you expect that break to be trend forming. And so regardless of where you look for altcoins, the last weekly candle essentially just wiped out a lot of these ranges, a lot of these structures, and puked through a lot of lows. Is there a chance of sort of some mean reversion given the magnitude of the move? Classic low liquidity, empty books, middle of the night weekend, maybe it bounces a little, no one actually wants to trade at these prices. Of course, that's completely reasonable. But bigger picture, that's a move that just broke a lot of shit. From a technical, market structure, whatever point of view, and even certainly from a risk regulatory point of view, it's not looking great for altcoins. Craig, do you usually not look for short setups, only long setups? No, if I'm trading my intraday stuff, it's both ways. So yeah, that's really the altcoin view. I mean, Link is a classic example, right? So much time spent in this range and pukes through it. I mean, could this be the bottom? Yeah, of course. It could be, but it needs to prove it by actually reclaiming something and giving some evidence to suggest there are some buyers willing to soak up the breakdown and that the breakdown isn't real. But we don't have that evidence at the moment, so... Again, I try to keep the system as simple as possible. A trend is intact until it's broken. Support is support until it's broken. Resistance is resistance until it's broken. A breakdown is a breakdown until it's proven otherwise. A breakout is a breakout until proven otherwise. Kind of very simple assumptions. And yeah, just a lot of alts don't look particularly compelling. That's really all there is to it. I mean, look at OP. We started bear talking this thing like here, right? Classic puke. And it sort of puked through all the so-called support levels as well. So yeah, alts. I think the last Altcoin Thursday we did was titled FUDding Alts, and they're down. I mean, Cardano, for example, we talked about the bearish retest like here or something. 20, 30, 40% down on alts. Just deeply uninterested in altcoins. I don't know how else to put it. We could do the whole thing where we go down to the 1 hour and the 4 hour and draw the ranges and all the levels and say, bounce from support to resistance. But really, it's a waste of time, I think. Maybe something more fit for Altcoin Thursdays, but given this is a weekly type of channel, I think it just makes sense to look at the higher time frame stuff and not look at hourly ranges that are going to be expired by the time you watch the video, and if you do it like a day later, you know. Is there a possibility that crypto is lagging and will follow the trad markets? Is there a possibility? Yes. Do I think it's particularly high? No. Do I think the more compelling explanation is crypto weakness and not lag, because we have all this regulatory pressures and people trading off of that insider information and a lack of risk appetite in general? Yes, I think that's more compelling than lag, right? Yeah, that's really all I've got. I mean, leave a like on the video if you've made it this long, or if you're watching the replay version. I'm happy to stick around and answer a few questions if you have any, but really, to be honest, to be completely candid, I just tried to record Monday markets, but I kept sort of fumbling and going back and forth on points, so I thought what better way to do it than do it live, so which is why we're here. I know it's an unusual format, and it's customary for Monday to be the short video, but we'll be back next week for the canonical length of this show. Thoughts on FTM? FTM? I don't know, mate. Honestly. Just a big puke, isn't it? I mean, I could start drawing on this thing, right? Like, is this what crypto YouTube is about? I could start being like, oh, this is a level, and if you go back, this is a level too. You know, like we could perform that exercise, but bigger picture, I mean, what's the expectation here? This thing has just been downtrending forever, essentially. Now, right? Now you've had some acceleration, which is good. You've had some acceleration into some high time frame levels. So maybe it's good for a short-term bounce, perhaps, right? Given we're at some sort of weekly structure. The first trouble area, I'd be pretty conservative, to be honest, and just use this range high here at 25 as the first trouble area. And there's some overlap, you know, with 27 cents as well, if you're looking at these highs as a whole. But yeah, just I don't want to be holding altcoins. Thoughts on ARB? I think this is another one we shit talked on both Technical Roundup and Casual Friday. I mean, I'm not sure what to say. From a technical perspective, it broke down. Similar type of thing, right? It had a floor of sorts for a couple of weeks. This was its support, and now it's broken. That looks bad. It will look less bad if it gets back above it. But at the moment, it went sideways for a while, and it broke down. So, until proven otherwise, support is broken, and the range is broken to the downside. So yeah, I don't know what else to say. Fill the gap. Fill the gap to zero. That's the TA. Very inefficient price action. That's a joke, by the way. Can you distinguish between deviation and break of structure if possible? I mean, everyone does this differently, but generally speaking, when you have a lower low, right, that's a break in structure. It becomes a deviation if it gets back above the low that was broken. However, it could still be bearish market structure if ultimately it makes a lower high. Okay? So the key distinction, if there is one, and it's fairly minor, between a deviation and a break of structure is the break of structure happens whenever the lower low forms or the higher high forms. The deviation happens whenever it gets back above where that break took place. Okay? That's really it. But I wouldn't get too bogged down in it, honestly. It's like, oh, is it deviation? Is it break in structure? Is it a change of character? Is it this, that, and the other? Like, you know, prices below a low. That's it. Don't get boggled up in the names. It's not a good use of your time. Yeah. BTC weekly MACD. I mean, a lot of the trend stuff is pointing down as far as I'm aware. So that's not great. But it's not something I look at, so I don't have strong views. I mean, MACD is halfway to McDonald's, so I'm very skeptical of using indicators that are half fast food restaurants. How does Ripple look? I mean, better than a lot of stuff, right? Better than a lot of stuff. Grinding up against resistance. I think the reason this hasn't dumped as hard as everything else is because there's some expectation for litigation-related news. This whole Hinman, XRP, SEC lawsuit case thing. I think the market is expecting updates this week. So that's why those traders have been more reluctant to dump this thing than others, because there's a chance that there's a catalyst that plays out. So that's why it's there. But I think unless you have some sort of insider information, I have no idea how you would. This is just a speculative play, a coin flip on the lawsuit. That's it. TRX. Ugh. I mean, it just puked back within the range and kind of closed at that level. So I didn't think a lot about it. Looks not amazing, and you know, unless it makes some progress. But at the moment, regardless of the daily or the weekly, you had a pretty big area, and then it just puked below. If it starts to make its way back above, yeah, it starts to look okay. But it's almost boring doing kind of counterfactual deviation setups, because a lot of the time it's just not what's in front of us. So this is, I'll just say it's at resistance, right? That's it. Aptos, God, has this become a 2017 style altcoin charting stream now? This is all how the mighty fall. Honestly, like, to be completely candid, I don't think the individual chart makeup of any single altcoin is particularly important at the moment, because what we had was a ton of very sloppy selling into an overnight session, which caused much larger moves than they should have been. We had a bit of mean reversion just as a function of sort of microstructure, where no one really wanted to sell at this price, right? So, I mean, liquidations in general are mean reverting. So we had a bit of a bounce, and now the market's just waiting to see whether there's more news coming, or whether BTC is going to puke, or what the next catalyst is, before deciding whether to revert higher or just keep puking. But even if it reverts higher, for a lot of these altcoins, these breaks just completely stuffed them in terms of either their ranges or their market structure. So even if you do get bounces, I think those bounces are more likely to be bounces into resistance than something that reverses a larger trend. Which is why I think looking at individual tickers is almost a distraction, because most of these charts structurally are very similar. Either they were downtrending and that downtrend got accelerated by the alt sell-off, or they were ranging if they weren't downtrending and those ranges were broken by the sell-off. In both cases, if you're playing bounces, that's okay, but we've seen a decent chunk of mean reversion play out already. And then those bounces are likely going to be bounces into resistance, at the very least on the first test. So, yeah. And like, the US is straight up trying to make altcoins fucking illegal at the moment. So, apart from trading perps or whatever, I don't know how much risk, at least in the short term, I'd want on any of these names. Okay, that's it. I'm not going to waste any more of your time. Leave a like on the video if you enjoyed it. If you want to give me some feedback on the actual comment section of the video as to whether you want more live stuff or not live stuff, you can let me know. Check out the show's sponsor, Woo, if you want to support us. They make Don show up on time, which is quite impressive. So thank you for them for helping us. And as a quick spoiler, for those of you who are showing up live, I'm working on a new playlist for the Cred channel. A lot of the videos are 60 to 90 minutes, which is just too long for the Zoomer generation. When I started them in 2017, 2018, 2019, people had attention spans. Now they don't. So I feel like in order to reinvigorate the playlist and do a bit of housekeeping, I'm going to do a new series of going over all the videos in the playlist, just 10-minute versions of them. And that will hopefully kind of allow me to update them without updating them, refresh them without fully refreshing them. And then we can also get some Zoomers in to get a taste of the good stuff. This is the gateway drug into the hour-long videos. So yeah, we'll see if that gets any interest. If not, you never saw this and this video will self-destruct. That's it from me. Please leave comments and stuff, specifically if you thought the live stream was the most boring, monotonous thing ever, or if it was somewhat helpful or stuff you want to see. I mean, look, ultimately, at the end of the day, this show and this channel is for your benefit. So if you want to say, look, stop dismissing the low time frames, give me all the 1 hour support resistance levels for Aptos and how you would trade them. If you want to sort of extort me to that extent, you know, if you think that's useful and there's enough consensus around it, I can do that. But just let me know what you want and we'll make it happen, as long as it's somewhat reasonable. That's it. See you in the comments section, and yeah, bye.